Hello, my name's Charles Lastic. I'm the Managing Director of Blue Bond Tax Planning. I've been helping clients avoid UK inheritance tax for more than 18 years. And this video is around gifts that you can make on an annual basis or in other methodologies to avoid and reduce UK inheritance tax. Okay, welcome back. And as I said, this video is around gifts that you can make on a regular basis to avoid or reduce UK inheritance tax. So the first and most obvious one is the small gifts allowance of £3,000 per year. Now, this is an entitlement for each person. So if you're a married couple, you can give £6,000 a year away. Now, you can do that every year, and so it's not based upon the person that you're giving it to, it's based upon the person making the gift. So the person making the gift has the allowance of £3,000, irrelevant of how many people they gift it to. Now, if you've not made a gift of that £3,000 in the previous year, you can make £6,000 in any one given year. So effectively a married couple could give £12,000 in the first year and £6,000 thereafterwards. So for a lot of people who've got a big inheritance tax problem, this might not seem worthwhile, but if you think about it, if you can give £6,000 a year away over 10 years, that's 60,000, which is a £24,000 tax saving. So actually not to be sniffed at. Other gifts you can make, you can give 2,500 away to one of your grandchildren getting married, or 5,000 a year each to one of your children getting married. So a married couple could give £10,000 to one of their children. It must be given before the marriage takes place, and the marriage actually has to go forward and take place for that exemption to work. Lastly, there is what's called the very small gifts allowance, which is £250 to an unlimited number of people. So if you had 50 friends at a party and you really liked them and you wanted to write them each a cheque for £250, you could do so, as long as the same people didn't receive any of your 3,000 annual gift allowance. So hopefully that makes sense. Last but not least, which is the most underutilized mechanism, which is called the gifts out of normal income rules. Now, this applies when you use your income. So what's income? Anything that's liable to income tax. So pensions effectively can be utilized, or if you're earning, that kind of stuff, right? So if it's income and you gift it away from your regular income, so it's not coming out of your capital, it has to be proven that it's coming from income. Really, there's no limit. So we did have a client who was earning 100 and something thousand a year, and we gave £50,000 away a year based upon this rule. So as long as you can prove it's coming out of income, that's a really useful mechanism, but you've got to make sure you keep proper records in this case. So that's gifts to reduce income tax. Hopefully that's helpful, and bye for now.